Fuel prices are expected to go up by 25% per litre from February the 1st if the suspended price stabilization and recovery levies is reintroduced. Now, the Institute of Energy Security has disclosed this is as a result of an 8.52% increase in the price of Brent crude and a marginal depreciation of the cedi to the US dollar in the last 2 weeks. We have more in this report.
Price list of these bulk oil distribution firms for the next 2 weeks, diesel will witness the highest increase, going up by 5.6% per litre. This should translate in currency terms at around 39 pesos increase per litre. Petrol will go up by 3.6% per litre. That should be around 25 pesos per litre increase. Now, this is the price that the bulk oil distribution firms are going to sell to the oil marketing companies from Tuesday, that is tomorrow. But looking at the current challenges facing most of the oil firms or the more than 100 companies in the country, it might be difficult to absorb this increase. However, we shouldn't forget the role of gold in all this. It is currently selling a litre of diesel and petrol at 6 cedis 85 pesos. Now, if GOL, which has its own bulk oil distribution firm, goes ahead to increase prices at the pumps by this margin, then we can say that we should be looking forward to some interesting times ahead. The increase can be linked to the current development on the international market, which has seen crude prices hit an all-time high. There is currently a convention between the Transport Ministry and transport operators that any time prices of petroleum products go up by more than 5 to 10% in a quarter, that should trigger discussions between the Transport Ministry and unionized transport operators for fares to go up. So, looking at the way things are going now, will the commercial drivers push for discussions for fares to go up?
Now, we know this is as a result of an 8.52 increase in the price of Brent crude. We could help you appreciate the estimate in the graphics on your screens there. The fact that, the introduction of government duty discount on benchmark value policy, well, of course, this is a different situation that we're talking about. But of course, the depreciation of the cedi against the US dollar adds on to the factor of price increases, which could see all the oil marketing companies crossing the 7 cedi per litre mark for gas, oil and gasoline. The Executive Director of the Institute of Energy Securities has joined us via Zoom, Nana Moisi the 7th, for his thoughts on this. Welcome to the program. First of all, what other factors are influencing the cost of these commodities, especially LPG?
Thank you, Saite. The local market is predominantly impacted by happenings on the international market, because when the prices of LPG, ATK, gasoline and gas oil on the international market surges to certain levels, because for every liter of fuel that we consume, it's imported and we are price takers, definitely it will hit the pump. The importers, being the BDC, will pass on the extra costs to the OMCs. The OMCs will direct it to consumers. Again, on the local front, the cedi is not doing too well against the US dollar. And because these products are procured with in US dollar terms, any depreciation means that the value of the amount of money held by BDCs to procure similar parcel of products, has shrunk. And so that very situation calls for additional cash inflow, or the BDC looking for additional cash to buy same quantity. And that extra cost will be passed on to consumer. And so for this projection, it is hinged largely on international fuel and oil prices, and to some extent, the forex exposure that we have as a country.
Indeed. Well, these hikes are occurring despite a suspension of the price stabilization as well as the recovery levy, which hitherto had some impact on the cost buildup. Why is that the case?
Well, the price stabilization recovery levy is between 14 to 16 pesos per litre. For this window, as per IES analysis, not less than 25 pesos will be added on to each litre of fuel. And so if you take out the 14 pesos, there's still something left for the OMCs to transfer to consumers. And so the suspension of the price stabilization recovery levy doesn't take away any form of fuel price increases if it must happen.
Should things continue the way they are we to expect more hikes in the weeks ahead?
Maybe, because you will see that on the international markets, demand of fuel is still growing, even though we have COVID. The first wave of COVID did impact on demand globally, but for this, strain, we still have room to have mobility and production going on around the world. And so there's still high demand for fuels and crude oil. Meanwhile, there is also the Ukraine and the Russia tension,
Indeed,
which is having a form of impact on price. That very risk of any form of war between these two countries has been priced in by the traders. And so demand is growing. Meanwhile, supply, has fallen on the global stage. And so whilst we see international prices go up, definitely it will hit the local markets until we find mechanisms that are more sustainable beyond the price stabilization and recovery levy to address these matters. For now, we are largely exposed to supply and price shocks because the Temoyo refinery is not working. The BOS strategic fuel system is not working. The cedi is still depreciating and it's not holding the strength against the US dollar.
Not looking that good, but what buffers must be injected to save consumers from these price buildups?
What readily comes to mind is asking government to remove some of the taxes and levies. But then, where we stand today, where we are, battling with yield levy and the rest, it's difficult to call for a removal of any form of taxes or levies. But then, let's also avert our mind to this. Whilst international prices goes up because we also trade our crude oil that we produce as a country, we are getting more revenue. So there's a windfall there. Government can look at this windfall and maybe extract one or two taxes or levies from the price build-up.
Great. Nana Mosi, the 7th, we're grateful that you could join us, the Executive Director of the IAS there. Well, we do know that LPG is a commodity consumed by millions of households in Ghana. Hence, the impact will be indeed felt. Gabriel Kumi is Vice President of the LPG Marketers Association, and he joins us as well on this topic. Gabriel, we're grateful that you could join us. The IAS has predicted some price hikes in petroleum products, including LPG. What is your association picking from this projection?
Charles, thank you for having me. I think Nana has done justice to the topic. I think he's explained everything that he's saying.
Yeah.
I mean, price of petroleum products in general is going up, and the LPG is no exception. That is why, as an association, we have been calling for a more sustainable means to try and bring the prices of LPG down. Nana has said that it will be difficult for us to call for a reduction in taxes, but I think we have been calling for that for the past 3-4 years. Because ironically, government has set itself an objective to increase consumption of LPG from the current 25% penetration level to 50% by the year 2030. And we all know LPG is a product with an elastic demand. If you want to push consumption of such a product, I think the obvious thing to do is take measure to bring down prices so you can attract a lot of people into the consumption net. So government objective of trying to push LPG consumption from 25% penetration level to 50% will be achieved. I think it's true. Government, there's a lot of wisdom in government attempt to try to push up consumption of LPG. We believe that the benefit that this country stands to gain by pushing up consumption of that product called LPG far more outweigh the taxes we are gaining from these products.
Indeed. So paint to us a picture about, the prospect of the prices of LPG moving forward. Because, as we're ending the last quarter of last year, you made, specific projections about the cost of LPG going to skyrocket, shifting away consumers within this particular field. Now we've heard from the IAS. Help us understand projections in the near future.
Yes, currently LPG consumption in Ghana is on a decline. On the surface, it's very stagnant. The consumption is very stagnant. For the past 1 year, we've been stagnating. We've been doing about an average of 28,000 metric tons a month. And naturally, population is growing. So the natural expectation is that as population grows, there should be that natural growth. LPG should be growing by at least the growth in our population. But we are not witnessing that. LPG consumption in Ghana is stagnating. It's stagnated. And if you look at the real figures, you see that consumption is coming down. And we think that is not too good for a country that is wishing to push consumption to about 50,000 metric tons per month.
So how can the price build-ups, as we've heard from the IAS, further deepen the woes of consumption?
Obviously, as I did indicate, LPG is a product with an elastic demand. Any percent increase in the price of LPG goes a long way to reduce consumption of the product. So as prices are going up, the obvious thing you should expect is that less and less people are going to consume LPG. Now, when you go to the pumps, you take some 30 minutes off your schedule this weekend. Go to any LPG station close to you. Observe the buying pattern of the consumers. Now, our research indicates that when you go to the urban areas, about 50% of the people who walk to any LPG station are not able to fill their cylinders. They buy in tots. Give me 20 cedis, give me 30 cedis, give me 40 cedis. Why would somebody carry such a metal, travel all the way to an LPG station and go and buy a tot? They can't fill it. They can't afford it. So there is no way we are going to grow consumption of LPG if we are to keep prices of the product at where it is now. That is why we have been calling for a total scrap of all taxes on LPG. Indeed. Mind you, this is the product we use to subsidize.
All right.
We used to subsidize LPG to the tune of about 50% at the introductory stages.
And we shall see how
the stage where consumption started growing, where the subsidies were becoming so huge. Government said it could no longer find money to subsidize.
Sure.
So
And of course, we shall monitor how this impacts consumption at the pumps, as you rightly stated in our subsequent bulletin. Gabriel Kumim, we're grateful that you could join us with your thoughts on this matter.